Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, March 1st. We got a lot of economic news releases scheduled for today. Tomorrow will be actually a pretty quiet day in that front, but today it's loaded, so we'll jump right on into it. We'll start off with the weekly jobless claims. Last week, we had 353,000 people filing. They figured it would drop a little bit to about 350, and it did drop down to about 351. So we're still within the same range. So it's still obviously better than over 400,000 every week applying. So we haven't been for the last couple months now. We've been underneath that. So that's good news right there in that arena. So and then personal incomes for January, we had back in December a 0.5% increase in personal incomes. We figured it would be up about 0.4, and we're up about 0.3. So still not bad, not as high as expectations, but still not too bad for January. So people are earning a little bit more money. And then we got consumer spending for January. Back in December, people basically weren't spending anything. And then so they figured it would go up to about 0.4%. And only went by 0.2%. So people are earning a little bit more and spending some, but not as obviously exceeding their income. So at least it shows that people are probably saving, or at least socking away some money right there. So that's kind of a good sign right there as well. Obviously, people need to. We've kind of got our old habits of saving money over quite a while here. So hopefully these bad times have kind of taught people lessons here, as many of our grandparents probably told us, or great grandparents from the days of the Great Depression, of what they learned from those lessons. Let's start with the core PCE price index. This is important because this is the Fed's favorite gauge for inflation. And basically, this is stripping out any food or energy, so there's no volatility. And this is the previous month, December, it was 0.2%. We figured it would remain about the same, and it came in at expectation. So still pretty tame as for inflation, what we're expecting. And then the next item to note is ISM services. We had 54.1 back in January, and we figured it would go up a little bit since it's been kind of trending upwards, and it pulled back slightly down to 52.4. So manufacturing was down a little bit, so not the greatest news right there. And then construction spending for January. So back in December, it was up about 1.4%. We figured it would still go up, but not as about half the rate at 0.7%. And basically, it contracted a little bit. So construction spending goes down a little bit. So something's kind of pulled back. We're getting kind of mixed news here from personal incomes. Jobless claims are still decent. PCE is still pretty good, but ISM and construction obviously not as good of a news. So let's jump over to the headline news, and stock market's been up. Bernanke had his testimony to the House Financial Services meeting, covered a lot of topics. They're going to really start watching the employment, as I mentioned yesterday. They're basically at the very low end of the spectrum of things when it comes to what they forecasted for 2012. So we're kind of at that bottom level of what he figured. He figured it was going to slowly come down, but we've already kind of reached the lower limit of where we thought we were. So he's going to be watching that, but he's not saying we're out of the woods yet, but they are kind of watching that cautiously. There's been kind of some mixed signals out there for some things looking good. Some things are kind of holding back a little bit. Still concerns about, of course, Europe that could intertwine things. So different aspects he kind of covered in that committee. So it's kind of, if you have a chance to take a look at it, MarketWatch got a good article on their marketwatch.com. So with all this ado, let's jump over to the bond market, see what interest rates are doing for today. So as you can see with the long red line toward which brings us down, bond markets was tanking. We had an opening day gap again even further, so another 30 basis points from when we left off yesterday. So we had a pretty sharp decline in the bond market, meaning rates went up. So rates have jumped up quite a bit actually. Especially when you consider it was about 60 basis points, 60 to 70 basis points that we jumped up. So consider that rates did go up quite a bit. We're at the lower part of the 103. We're touching the floor. And at some point, we do have an opening gap, so that will probably be closed at some point. Maybe today, maybe over next, or maybe even tomorrow. But yeah, so rates are a little bit higher today. And so we've reached our peak right now, and then we've kind of dropped a little bit. So, all right, folks, you guys have a wonderful day. If you're on the sites, please subscribe, get your free daily updates, and pass along. Appreciate any support.